If you're still sitting there trying to figure out all the different announcements that have come out in the last couple of weeks and months, well, you're not alone. Virtually everybody I talk to on a regular basis has some kind of concern about the housing market. When will prices go up? When will they go back down? Are rates coming down anytime soon? What do I do about my upcoming mortgage renewal? Can you explain to me the new tax rules? Okay, let's talk about this. I'm going to unpack a few of these things, and I'm going to put some links in the content below for additional resources that you should check out if you have questions about any of that. Let's start off with the new rules and announcements that came out in April of 2024. First and foremost, the Canadian government came up with some new tax rules that are impacting those who are selling investment properties. Now, this is already coming down the pipe in June, so no point in rushing off to sell off your real estate right now. Essentially, if you are a person, it's not in a company, and you make more than $250,000 of profit on a property, you'll be taxed on the amount above 250 grand. Now, you'll be taxed at 66% of that amount, whereas it used to be 50%. That doesn't mean you're paying 66% tax, you're paying the amount of tax that you're at your marginal tax rate. That was a lot. So I made a 10-minute YouTube video about all that. You're gonna check out that below. Up until today, capital gains taxes were paid and charged on 50% of the profit of a property. There's a common misconception right now that capital gains tax rate has increased to 66%. That's not actually what's happening right here. So let's break it all down. Second, first-time homebuyer benefits have slightly changed. So if you or a family member thinking about getting into the marketplace, there's a small adjustment to the marketplace, nothing crazy. First, you can use up to $60,000 of your RRSPs tax-free. It used to be $35,000. And second of all, after August of this year, you will be able to use a 30-year amortization if you're a first-time buyer and it's a new build property. It's not really helping people get into the market for resale properties, so we think that might actually increase the cost of new builds, but something to consider, and that does increase borrowing power by about 5% over the initial amount. There were some other announcements. If you haven't already checked out our YouTube channel or podcast channel, check it out because I knock down all that stuff on a weekly basis. Now, number two, rate predictions for 2024. This has been a crazy year already. In January, we saw the market rates go down significantly on the back of lower bond yields. If you don't know, fixed rates are typically based on bond yields. But after that, from March and up all the way up through April, we saw bond yields start to increase, which actually effectively brought rates up 0.5%. So they're substantially lower than they were in the fall, but not as low as they were in the early spring markets. While we might be seeing a fixed rate reversal to bring us back to where we were in the early portion of the year, it'll be a wait and see approach at this point right now on the backs of slightly lower oil costs and of course lower than expected job volume. Again, we might start to see interest rates decline a little bit on the fixed rate side, which should bring people back to the market. I think many people underestimate how rate sensitive Canadians are, and I think foolishly in many situations. Nonetheless, it is a real thing. What's happening with the BOC? Well, as we know, the BOC reduces rates when they feel like the economy is ready to be slightly stimulated or that the current rates have done their job. At this point right now, Tiff hasn't told us when he's going to lower rates, but the markets are projecting a 70% chance and a likelihood of rates declining, or at least by a quarter point in June of this year. That being said, the BOC has publicly stated that they're going to go down slowly, and the markets right now are projecting over the next 3 years rate drops of about 1.75 to 2.25%. So if you're in a variable rate mortgage, this is obviously welcome news, although it will happen slowly. My advice is if you're getting into the housing market or looking to buy real estate, before June would be ideal. So reach out now to get that pre-approval in hand so we can lock in your pre-approval rate hold before things get out of control. Welcome news for sellers, not so much for buyers. Speaking of which, the real estate market has been really interesting this year. It was on fire up until March, and then April quieted down because the Bank of Canada didn't lower rates, but this has actually helped out buyers when it comes to being able to have more inventory and choices. We don't think this is going to last very long because the supply levels are still exceptionally low, but we could see this continue on for at least another month. Some surprising facts: we're seeing more families than ever that were moving out to different areas, including Alberta. If you don't know, myself and my team, we're licensed in Alberta, and we can work in other provinces throughout the country to help out our clients, and we're doing more than ever moving people to different places. But there's things that you need to know about being able to get a mortgage when you're moving, namely where you're working and are you bringing your income with you. Renewals are a hot topic right now, and I'm talking like hot, like burning fire. It seems like every day we have a client or a family member or a friend of theirs reaching out to us to help them with their mortgage renewal because the banks are dropping the ball left, right, and center, or people were waiting last minute to reach out. Remember this, it's never too late to reach out until you just don't reach out at all. And whatever your bank is offering you is probably not either A, very competitive, or B, considering your situation. We could look at lowering your payments. We could look at extending your amortization, including debts, getting lower interest rates. There's a lot of different things that you can do. And by not doing anything, you're gonna just basically cost yourself more money. Last but not least, if you are in the marketplace and you're wondering, can these guys help me out, or can I introduce them to my friends or family? The answer to that question is yes. We'd be happy to take on more clients. We've recently expanded our team and added a new team member, which we're so excited about, and it is giving us the opportunity to serve more families than ever before. If you found this information helpful, please don't hesitate to click on those YouTube links, those podcast links, reply back and let me know, because I'd love to hear from you, and I'll see you on the next one.